Welcome back, everyone. In today's video, we need to talk about some major breaking developments around Cardano because there has been a lot happening lately, but yesterday brought a huge surprise as USDCX officially went live on Cardano. And this is not a small update. This is a massive milestone for the entire ecosystem. We are going to break down what this means moving forward, how this could impact liquidity, and why this launch feels different from previous announcements that were delayed or pushed back, because this time it appears that mainnet testing is already underway and full integration is expected to go live by the end of the month, which signals real follow-through instead of just promises. One of the biggest questions surrounding USDCX was whether it would truly bring meaningful liquidity into the Cardano ecosystem, and the answer now looks like a strong yes, especially considering the key features such as being unfreezable, private, and offering automatic conversion from USDCX to USDC, which removes friction and makes it far more usable within the broader crypto market. This is a huge win for Cardano because stablecoin liquidity is critical for DeFi growth, trading volume, and overall ecosystem expansion. And now we are seeing that foundation being strengthened in a very real way. What makes this even more interesting is what is happening in the broader stablecoin market, where over the past month, USDT supply has fallen by around 1.7%, marking the largest drop since the FTX collapse, while during that exact same period, USDC supply has increased by roughly 6%, meaning market share is clearly shifting toward USDC, the very stablecoin now integrating into the Cardano ecosystem, which suggests that this timing could not be better and that Cardano may have aligned itself with the right liquidity partner at the right time. Now, beyond stablecoins, we are also seeing clear signs of increasing institutional demand. And this is not speculation because institutions are actively adjusting their allocations. In fact, Grayscale recently updated the weighting of its smart contract fund once again. And if you remember, ADA previously held around a 15% allocation several months ago, which gradually increased to 19%, then 19.5%, and as of the 17th, it now sits at 20.2%, meaning institutional capital is steadily increasing its exposure to ADA and slowly chipping away at other major smart contract platforms within that fund. Institutions clearly want to be positioned ahead of major ecosystem developments, and Tier 1 stablecoin integrations and expanding partner chains are exactly the type of signals that large players look for before scaling their exposure. At the same time, we also need to discuss Knight, which has been performing extremely well recently. We talked about how breaching the 20-day moving average would signal momentum shifting, and over the past 48 hours, Knight has not only held that strength, but also broken above the 50-day moving average. And while we are currently seeing a healthy retest, the broader structure is forming what appears to be an inverse head and shoulders pattern with a double right shoulder. And for those who understand technical setups, if this neckline breaks on strong volume, it often leads to an aggressive breakout scenario that could potentially push Knight toward or even beyond a new all-time high. This is not financial advice, and there are no guarantees in markets, but the setup is clearly bullish if continuation holds. And what makes Knight unique right now is that it is not strictly moving in sync with the broader crypto market because it is still a young asset whose liquidity pools and exposure are closely tied to Cardano, while also appearing on new tickers and exchanges, increasing visibility and speculation. Historically, newer assets can become some of the strongest performers during specific cycles as investors search for high upside opportunities, often resulting in rapid moves upward followed by sharp corrections that retrace large portions of gains, which is a normal pattern for emerging assets. And if this current structure continues to play out the way it is forming now, it could be an extremely exciting phase, not just for Knight, but for Midnight, Cardano, and ADA overall. Despite mixed or even negative macro headlines affecting crypto broadly, strong ecosystem developments like these tend to attract both retail attention and institutional positioning, and that combination is where powerful trends can begin. So that is the full breakdown of what is happening right now, from USDCX going live to stablecoin market shifts, to institutional allocation increases, tonight's bullish technical structure, potentially targeting a new all-time high if momentum continues. If you found this breakdown valuable, make sure you like the video, subscribe to the channel, and turn on notifications so you do not miss the next update. And I will see you in the next one.